Hello, traders. Gary Wagner here. Just before 2 o'clock in Honolulu, 8 o'clock in New York. It is Monday, 7th day of June, 2021, and this is the daily report for gold and silver. Following Tuesday's debacle where it moved down $37, we regained 20 of that. On Friday, another 10 today. We're almost back where we started pre the ADP report. On a technical basis, as we'll talk about when we look at our charts, there was no major chart damage. We are still firmly in bullish territory, and that will be the focus of the show today, which begins now. Although we saw nice gains in gold, in terms of its trading in New York, it fell just short of $1,900. However, after the markets closed in New York and we had after-hour trading begin, we are now in Australia, we saw the market tick up over 1,900, 1,902. We are currently trading at 1901.80, putting it up $3. And when added to the $9 gain in New York, we've got gold, as I said, at 1901.60 as it stands in Australia. They say a picture is worth 1,000 words, and the picture we are looking at is a 15-minute area chart based upon the close to show the recent activity in gold. We've had a nice methodical move in gold. That was up until Thursday the 3rd when the ADP report came in, and it came in well above estimates. That caused a plunder in gold prices from approximately 1912 to close at approximately 1867. We can see that in overseas trading, it ticked up slightly, but still remained at approximately $1,875. That was until the Labor Department released its numbers, and when compared to the forecast, which was 671,000 new jobs would be added, and that is really what caused gold to then rise again, trading up about $20 on Friday. You can see that here. But then today we had some strong follow-through, and that's what is most impressive to me, is the fact that we did close back above $1,900 per ounce. That is a key level. If we maintain a level above 1900, that would certainly trigger a buy signal in gold, in that I would be looking for it to hit first 1912. We'll have to go to a longer term chart to then look at our forecast that would go out for the next couple of weeks. But it's certainly very, very bullish in terms of its undertones. As you know, we spoke about the fact last week that even though, unfortunately, our stop was hit, I still believe that we had technical studies indicating a bullish demeanor. We talked about the golden cross that occurred when the 50-day simple moving average crossed above the 100. Earlier, about 2 weeks ago, we looked at the exponential moving average, and those crossed a little bit early. We also talked about the fact that gold has maintained a price point above the 200-day moving average, and now it is back above the 50% retracement level that we have earmarked. Our current resistance in this area, with the assumption that we get an effective close above $1,900, the first level we'll look at is about 1930. That is the 61.8% fib retracement. But assuming that we do see the market consolidate or trade higher, now above 1900, the next real target has to be a series of tops that came in at the beginning of the year when gold hit these highs at approximately 1965. So in terms of our current levels of resistance, I believe the first one begins at 1929, the 61.8% fib retracement. The next comes in at these tops right here. They occurred at the beginning of the year. And then the 78% Fibonacci retracement that comes in just below $2,000. We are currently flat, but we are looking to position ourselves from the long side. That's what I spoke about last week. I still believe that that is the most correct action. And effectively, we did not get a close above 1900 New York. But if we do open above that tomorrow morning, that would certainly trigger a buy signal in gold. After the declines that came in last week in copper futures, we have it forming a base. It is currently at $4.52 per pound. It is down approximately 0.006% or 0.1% lower on the day. Traders, if you recall from Thursday's show of last week, I did make a recommendation that if you had the available capital to add to your copper position to effectively dollar cost average, traders doing that added a position at $4.47 per pound. Currently, we're at $4.52 per pound if we round up. Now, I also talked about the fact that this week what I want to do is show you a couple of studies that I've been doing in terms of a fib extension to forecast where we think copper could go. The primary method that we utilize here is measuring a third wave. Once you have the measurement of a third wave and the fourth corrective wave concludes, we do a 0.618% extension of wave 3 to forecast where we think wave 5 will go. And as I said, our target is $5.35. Maintain your current long position in copper, and if you added your add-on. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Tuesday for the next daily update and review. Bye-bye.